Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't have to, and today we are talking about Sofi Technologies, ticker symbol SOFI stock. If you didn't know, Sofi Technologies is a fintech company that has an all-in-one comprehensive app that has loans, personal loans, refinancing, auto loans, mortgages, bank accounts, checking accounts, credit cards, and much more. And this is one of my personal favorite high conviction plays. So what is the current stock price? Well, currently SOFI stock is trading at $12.08 per share. The low end price target, according to analysts, for the next 12 months is $16 per share. The average price consensus among analysts is $18.77, and the high end price prediction is $25. So it's always really good news to see that the low end price target is trading above the current stock price. And this gives investors a fantastic cushion just in case the most bearish analyst is wrong. Out of the 11 analysts that I studied, 5 analysts said that SoFi stock is a strong buying opportunity right now. 3 of the analysts said it's just a normal buying opportunity, and another 3 analysts actually said to hold the stock, while none of these 11 analysts said that SoFi stock would underperform the overall market, and also none of them said to sell the stock. Now, in a perfect world, I would love to get SoFi Technologies or get my average price of SoFi Technologies below $10 per share. But who's to say it could drop that low? Now, it definitely can drop that low, and $12 is a good average price for SoFi stock, but ideally my target is around $10, and that's where I felt most comfortable while investing into this particular company. So you probably already know that SoFi has had amazing news in the last couple of months, and the Super Bowl was held at SoFi Stadium. They also recently obtained their bank charter, which is fantastic news, so now SoFi can operate as an actual national bank. Also, they have fantastic news regarding their Galileo platform, which we will talk about later in this video, and eventually the student loan moratorium will eventually end sometime in Q2. What this means is that one of SoFi's greatest revenue streams is actually from refinancing student loans, and right now the student loan moratorium says that students don't need to pay any interest or even pay their student loans right now, so there is no incentive for students to refinance their student loans. And this actually hurt SoFi pretty badly, but since then they have recovered from that revenue loss. But after Q2, this revenue stream will be unlocked for SoFi Technologies, thus having revenues pour into the company, and that's a catalyst that I am extremely bullish on. So for investors that aren't going to get into SoFi stock right now, this could act as a giant missed opportunity to at least trade off of this stock and at most miss out on a very long-term lucrative investment that you wish that you would have bought while it was cheaper. So let's go through this article to see what this author has to say about SoFi Technologies. We also have to be careful because the short interest on SoFi Technologies is rather high. SoFi stock also has a very high short interest. For example, according to a recent report, at the end of January and beginning of February, SoFi Technologies SOFI stock is being sold short at a rate of around 16.9% of their overall float. And anything above 10% is relatively high. This means if SoFi Technologies can deliver a good earnings report, which is supposed to come out on March 1st, SoFi stock could actually go through a fantastic short squeeze, causing the stock price to absolutely skyrocket. The reason why we could surmise a revenues beat, an easy revenue beat, is because of the great news regarding their Galileo platform, and even if they don't beat revenues this time, once the student loan moratorium is lifted for their Q2 or even Q3, we could easily see a gigantic revenue beat. SoFi's management also says that it plans to increase and generate future revenue and EBITDA, and that stands for earnings before interest, tax, depreciation, and amortization. And when we assess a company, ideally we would look at their revenues, earnings, and of course their free cash flows. But in this video, we're really going to hone in on their Galileo platform, how they've been scaling their overall business, what do the fundamentals look like for SoFi Technologies, and what can we anticipate from their earnings report. I am actually pretty shocked that the SoFi shares have dropped below $13, mainly because they have had good news come out repeatedly, including their bank charter catalyst. And this has really put the hurting on larger bank institutions, because the banking system as it is right now is clearly going to change. It's either going to gravitate gravitate more toward fintech and financial technology, or it's going to gravitate more toward cryptocurrency or a hybrid of both of these segments. SoFi is already ahead of the game in cryptocurrencies as well as overall banking, and this is due to their absolutely amazing app. Their app allows you to invest into stocks as well as cryptocurrencies. They offer personal loans, student loan refinancing, which again is going to unlock a giant portion of revenue that is currently frozen right now due to the student loan moratorium. They also have their own checking and savings account, which is fantastic news. They offer home loans, credit cards, private student loans, insurance products, credit score and budgeting, as well as auto loans. On top of this, they also plan to add even more segments, which will then bolster their revenue and hopefully reflect very positively in the overall SOFI stock price. The bank charter was an absolutely huge win, and this just furthers SoFi's strategic plan, which will allow SoFi to lower their cost of capital while increasing their overall revenues. This will also increase net interest margins and drive higher incremental earnings before interest, tax, depreciation, and amortization. So overall, this is fantastic news, and it's really a head scratcher why SoFi stock continues to fall. These two graphs show both linear growth as well as exponential growth, and both of these are absolutely fantastic when talking about their lending products as well as their financial services products. So they are seeing an increase in both of these products, however their financial services products are growing exponentially, and that's where we're going to see the majority of their revenues coming from. They also have very competitive interest rates, and even though the Federal Reserve is projecting at least 3 interest rate increases in 2022, SoFi with this bank charter can actually still provide very competitive and low interest rates to their consumers. Now, another huge catalyst that is coming up for SoFi Technologies in the second quarter is that the student loan moratorium is set to end. Two of SoFi Technologies' largest lending products are personal loans and student loan refinancing. And like we said earlier, two of SoFi's largest lending products are personal loans as well as student loan refinancing, and they are constantly growing their mortgages as well as their auto loans. But these are mainly the two main drivers for SoFi Technologies at this particular point in time. And the reason why this is very good is because as SoFi's cost of capital decreases thanks to their bank charter, this will enable SoFi to lower their interest rate charges, including for their student loans as well as their personal loans, and basically any other loans that they are giving out. On top of that, we have seen their Galileo platform absolutely take off. If you didn't know, Galileo is a financial technology company that was acquired by SoFi back in May of 2020, and the Galileo acquisition allows SoFi to not only diversify their product offerings, it also benefits SoFi because SoFi is going to be able to collect transaction fees from institutions that actually rely on Galileo. So this is another fantastic revenue stream, not coming necessarily from everyday consumers, but rather other institutions. Galileo has been increasing their clients at an astounding rate. For instance, year over year, Galileo grew their clients by around 80%, and quarter over quarter, they have been growing their clients at around 12.66%, which is absolutely insane. Overall, Galileo has over 89 million accounts with some of the largest banks and neobank customers. And this is a major revenue driver that is set to continuously increase. So not only is SoFi giving loans out and making money off of everyday consumers, but also other institutions. And just like we saw earlier, their Galileo adoption is growing at literally an exponential rate. So this compounding annual growth rate for their Galileo accounts is absolutely fantastic news. So overall, the different revenue streams that they have built and the diversity of their revenue streams make SoFi Technologies extremely strong fundamentally. Just listen to how SoFi Technologies has been scaling as a company. Although the SoFi stock price has been declining, SoFi Technologies has been able to deliver monstrous growth numbers. For instance, this includes a 96% year-over-year member growth, a 100% year-over-year product growth, and an 80% year-over-year growth in their Galileo accounts. These are huge factors, and they are all growing by over 70%. A compounding annual growth rate above 30 is impressive, and they are more than double that year over year. This makes analysts very bullish on SoFi Technologies, especially for long-term growth. But even for the guidance of 2021, specifically for the revenues, they're anticipated to bring in around $1 billion worth of revenues and $28 million in adjusted earnings before interest, tax, depreciation, and amortization, also known as EBITDA. And all of this good news is taking place, and this revenue generation is taking place without one of their most lucrative segments, which is their student loan segment. Again, that has not been unlocked yet. Right now, it's set to unlock in May of 2022. So after that, SoFi is going to get a huge revenue boost, which is why I personally am trying to get stocks very cheap right now before they unlock that revenue source and that stream of revenue starts coming in. Once the student loan moratorium came in, SoFi had a revenue decrease of around 50% for this particular segment. So at minimum, SoFi is going to make back around 50% of their revenues in that particular segment. And this segment makes up more than 1/3 of their overall revenue sources. So we are not just talking about a small revenue increase once the student loan moratorium ends, where students will actually have to start paying and accruing interest on their student loans. They also want to refinance their student loan, and SoFi does a fantastic job marketing themselves to students because it is helping students as well as the company. So SoFi is lowering the amount of interest that students are paying if they refinance through SoFi. So this not only helps the students, it also helps SoFi because instead of the government getting that revenue, SoFi actually gets that revenue. So with high hopes, we can look forward to the second quarter and third quarter of 2022 for SoFi Technologies, and hopefully this is reflected very positively in their overall stock price. But again, ideally, we would want to get SoFi stock below $10, or even at $10 wouldn't be that bad. But because we don't live in a perfect world, if you could get SoFi stock anywhere between $13 to $16, that is also not a bad average price. That would just be an average price. So for SoFi Technologies' upcoming earnings report on March 1st, this could create a fantastic catalyst that could cause a short squeeze, which would cause the overall SoFi stock price to absolutely surge. And if that doesn't work, we can look forward to quarter 2 and quarter 3, where the student loan moratorium will end, where that revenue stream can actually take effect, and that could cause a short squeeze in the next earnings report. So at minimum, we would only have to wait a single quarter for fantastic returns in SoFi Technologies. I view SoFi stock as a good short-term as well as a good long-term company to invest in, which is why it's this author's particular high conviction stock. However, I personally have more of a longer-term time horizon for this particular investment because I am bullish overall, because I see the way banking institutions do business, it's not as effective as what SoFi is doing, and I just think that a lot of banks are just outdated and disconnected from what consumers need right now. SoFi is also becoming more mainstream, and they save plenty of money from having no physical branches apart from their Golden Pacific Bancorp branches. They are almost completely online, and they operate through their all-in-one inclusive app where you can utilize any of their finance products, insurance products, or basically anything you would need relating to finance. The article says that banking is a critical aspect of society, and SoFi is the future of personal finance, and I tend to agree with this. Every time Liz Young is on CNBC, SoFi gains more credibility. This credibility was even bolstered by the fact that they actually are a legitimate national bank thanks to their bank charter, and the positive effects of this bank charter are going to be seen in the second and third quarter at the same time that the student loan moratorium is ending. So again, fantastic news for SoFi Technology stock. We have great catalysts to look forward to, and at minimum, we may even see a short squeeze with the upcoming earnings report if they decide to have a substantial revenue and earnings beat. But I would love to hear your thoughts. Comment your thoughts down below about SoFi Technologies. Subscribe if you are new, smash that like button if you haven't already, and I will see you in the next YT video.